So global politics is uncertain. Nothing new there. But what about the global economy? You can check its health by looking at a number of factors, like the stock markets, or GDP projections, or consumer spending. For now, let's look at the markets. In the US, Standard & Poor is up 8% in the last 6 months. NASDAQ is up 14%, and Dow Jones around 3%. Now, these are solid numbers. But are we missing something here? Maybe a looming market crash. According to some investors, we are. Meet Michael Burry. You may know him as that guy from The Big Short. In 2008, he predicted the stock market crash. He made around $100 million in personal profits, plus $700 million for his investors. So he knows the market. And now he has placed another bet. It's worth around $1.6 billion. Once again, it's against the tide. Michael Burry is betting on a stock market crash. He placed the order in the last quarter. It makes up around 93% of his entire portfolio. So obviously, he's confident about it, and he's not alone. Warren Buffett is doing the same thing. He's among the biggest investors in the world. His company sold shares worth $8 billion in the last quarter. Is that a lot for him? Well, not really. But once again, the timing is important. American stocks are supposed to be on the rebound. Inflation is cooling down, so the economy should be shooting up. But these ace investors do not think so. They're predicting a crash. Have they spotted something that we haven't? Well, the US is not really out of the woods yet. A couple of factors can still drag them down. Number one, of course, is China. Every single indicator from Beijing looks bad. Consumer spending, factory output, exports, fixed asset investments, all of it is in the negative. China's numbers look very bad. And this could have spillover effects on the US. Their Treasury Chief, Janet Yellen, admitted this, but she says Asian economies will be more affected. Factor number two is banks, American banks. A number of regional US banks have already collapsed, like First Republic and Silicon Valley. But the crisis is not over. Ratings agency Moody's has already downgraded 10 American banks. Another agency, Fitch, is warning of the same. They say dozens of US banks could be downgraded. We're talking about the big ones here, like JP Morgan Chase, Bank of America, Citibank. If they are downgraded, the impact will be huge. In fact, we're already seeing some downward movement. JP Morgan shares are down 2.7% in the last 5 days. Citibank is down 4%, and Bank of America around 5.6%. It tells you these credit ratings matter. Investors look at these ratings before putting their money in. Higher the rating, safer the investment, which is why a downgrade is bad news. But does it mean the markets will crash? I'm afraid it's not so simple. The US economy is going through a pretty weird phase. There's no other way to put it, really. Since March last year, the Federal Reserve has been hiking interest rates. They've done it 10 times. The lending rate is 5% higher than it was last year, and that's a lot, 5%. Ideally, this should have pulled the economy down. More unemployment, smaller GDP, less consumer spending. But the opposite is happening. Experts are predicting America's GDP to grow by 5.8% in this quarter. That's twice what it was last month. Unemployment has dipped to 3.5%. The US economy added 180,000 jobs in the last quarter. Spending is also up. Retail sales increased 0.7% last month. At the same time, inflation is down. It was 9% last year. It is 3% right now. So what exactly is happening? How is inflation falling without an economic contraction? Let me tell you what BlackRock is saying. It is the biggest investment firm in the world. It handles around $8 trillion in assets. BlackRock says this is all temporary. The US economy will remain stagnant throughout the rest of this year, neither expand nor contract. But next year, it could enter full employment stagnation. And what does that mean? Well, three things basically: weak economic growth, rising inflation, and shortage of labor. These three things could characterize the US economy next year. It's better than recession, but it also means no growth. Now, I must say this here. These are all different predictions. Each economist has something different to say about the US economy. Some business leaders are saying stagnation is great. Others say it's a disaster. Do you know why? Because we are in uncharted territory. Remember what we said about the Wuhan virus, how its long-term impacts cannot be predicted but only experienced. It's no different for the economy. The pandemic changed the structure of the global economy for the good or bad. Only time will tell. A typhoon in Japan, landslides in India, wildfires in the US and storms in Germany. 4 different natural disasters in 4 different corners of the planet. They make for dramatic pictures, but when we show them in the news, they're met with indifference. Show a climate story and most viewers will move on. Do you wonder why? Well, we do all the time. Perhaps people think it's a distant tragedy. It's happening to someone else, far away. It has no clear villain. So why should you care about a climate disaster that is not affecting you directly? I'll tell you why. You should care because it is affecting you in more ways than you can imagine. It is affecting the food on your plate and the money in your pocket, the sugar in your sweets and the tomato in your burgers, even the coffee in your cup. Climate change, extreme weather is impacting all of this and more. India's Prime Minister Modi said as much during his Independence Day speech this week.
आज दुनिया महंगाई के संकट से जूझ रही है। पूरी दुनिया की अर्थव्यवस्था को महंगाई ने दबोच के रखा है। हम भी दुनिया से जिन सामान की जरूरत होती है लाते हैं, तो हमें सामान तो इंपोर्ट करते हैं। हमारा दुर्भाग्य है कि हमें महंगाई भी इंपोर्ट करनी पड़ती है। मुझे तो मेरे देशवासियों को महंगाई की बोझ कम से कम हो, इस दिशा में और भी कदम उठाने हैं और हम उस कदम को उठा के रहेंगे। मेरा प्रयास निरंतर जारी रहेगा।
India's neighbors are struggling too. New Delhi has received a request, an SOS call from Nepal. They want food grains from India. The request was made last week. Nepal wants 1 million tons of paddy and 100,000 of rice. Also 50,000 tons of sugar. There is no immediate shortage, we are told. But there are fears that supplies could run out, so Kathmandu wants to beef up its stocks. It's a precautionary measure. Nepal will soon enter the festive season, so there is a chance that traders will begin hoarding supplies. Now, Nepal heavily depends on India for food grains. From 2021 to 2022, it imported 1.4 million tons of rice from India. 1.4 million. 1.38 million tons of non-basmati rice and 19,000 tons of basmati rice. This was the biggest import on record. But it may not be possible to repeat now because India has banned the export of non-basmati rice. That's what Nepal consumes in larger numbers. So now they've made a special request that they be exempted from this ban. In return, they have an offer for India. And this is what Nepal is offering, tomatoes. If you live in this country, you know tomatoes are a major pain point. Prices have shot through the roof. We've been telling you about this too. By the end of July, tomato prices had soared by almost 300%. What is driving this spike? A shortage in supplies. And what is causing the shortage? Climate disasters. They have ruined the crop this year, so India had to resort to imports from Nepal. Reports say last Monday, Kathmandu dispatched some 30 tons of tomatoes to India. But that has not really eased the shortages. Retail outlets are dropping tomatoes from their menu. The latest to join the list is Burger King. Even tomatoes need a vacation, they say. So they're dropping them from the dishes. Burger King is the 3rd major chain to do this. Earlier, McDonald's and Subway took the same call in India. And such stories are not limited to India. Extreme weather is taking more victims around the world. Indonesia, for instance, is suffering from excessive rain. This has hurt their coffee output. It has shrunk. As a result, prices have shot up. Halfway through 2023, coffee prices went up by 40%, 40% hike. Same with cocoa in Africa. Supplies have been dipping. Ghana is the world's 2nd largest producer of cocoa. Yesterday, it said it will export less cocoa. In June, prices touched their highest levels in 46 years, cocoa prices, the highest in 46 years. Now, with Ghana cutting supplies, the prices will rise only rise further. So your chocolates will become more expensive. Then we head to China. It suffered devastating floods this year. This hit their corn and rice supplies. The extent of the damage is not yet clear, but earlier this month, China raised the flood alert level for 3 provinces, Inner Mongolia, Jilin, and Heilongjiang. Now, these 3 provinces account for 23% of China's rice output. What happens if Beijing does not get enough rice? It will turn to the global markets. It will buy extra supplies from the rest of the world. And China has the money to do so, but poorer countries will suffer because there's only so much rice to go around. Also, food exporters are already under strain. They may not be in a position to take the extra orders. They're dealing with shortages. They're struggling to meet the current demand. You can blame climate change for all of this. Also, conflict, specifically the war in Ukraine. Let me show you some pictures from yesterday. This is another Ukrainian port that's been hit. It damaged the grain silos. Last week, some cargo ships were under fire. Ukraine was a major supplier of food grains. Despite the war, it continued to supply thanks to a grain deal, a deal that was brokered by the United Nations last year. But last month, Moscow pulled out of the deal, and now it has warned that it will not allow grain supplies to leave Ukraine, which means more shortages for the world. Despite these threats, Ukraine is said to have managed to ship some grains today. It might cool the global markets for a bit, but between climate disasters and this war, the world is set to suffer for the foreseeable future. Our next story is about the screen in front of you, at least some of you, the television. It has undergone so many changes in the last decades. We had the single channel era, we had the too many channels era, and now we could be heading to the no channel era. Let me explain. In the United States, cable TV is losing out. I have numbers for the last month. Cable and broadcast made up 49.6% of total viewership. This is the first time it has fallen below 50% in US history. People are moving away from cable TV. So what are they watching now? What are they watching on TV? Streaming content. The likes of Netflix and YouTube grew to 38.7%. It's a record high. And just to be clear, this trend has been visible for a long time. Streaming was slowly eating into cable and broadcast viewership. These numbers merely confirm that. And India's situation is no different. We had around 131 million cable connections in 2020. 131 million in India in 2020. It fell to 120 million last year, and by 2025, it could reach 116 million. What does it mean? It means that more and more Indians are giving up their cable connections. What are they watching instead? Streaming services. India was the fastest growing market for Netflix last year. Engagement was up 30%. Same with YouTube. We had 265 million users in 2019. It has increased to 574 million this year. YouTube. So more than double. This does not mean that television is dying. It only means that we consume on television, what we consume on television rather, is changing. Let's stay with India. The smart TV market grew by 28% last year. People rarely buy the old ones anymore. Around 93% of all TVs sold are smart, which means they can stream content. Your Netflix, your Amazon Prime, all of it can be accessed on smart TVs. What explains the shift? Well, we can think of 3 major reasons. Number one, the nature of viewership. Streaming is on demand. You can pause it, play it, rewind it. And since most of us watch TV and multitask, we prefer streaming. With cable, that's not possible. If you multitask, you will miss out on the story. Reason number 2 is accessibility. Streaming can happen anywhere, on your phone, on your laptop, on your big screen TV, whatever you want. You don't have to be at home to watch something. You can do it on the go. And finally, reason number 3, the endless content. People can spend an eternity trying to just pick what to watch. Netflix, for example, has 17,000 shows and movies. 17,000. Amazon Prime has around 28,000. YouTube has more than 800 million videos. It's impossible to run out of content. Cable TV cannot offer you that, neither the scale nor the diversity of content. Does this mean streaming is here to stay? Well, the industry is not without problems. Most streaming giants are not making huge profits. Netflix made $4 billion last year, but their subscriber growth is problematic. They added 18 million new subscribers in 2021, but in 2022, just 9 million. So if subscriber growth slows down, How will streaming giants make money? By charging you more. Disney Plus is increasing prices by $3. Hulu is doing the same, and HBO Max has increased prices by $1. I'm talking about American prices here. Pretty soon, a cocktail of top streaming services could cost you up to $87. Last year, this was $73. So streaming costs are rising. But will that be enough to push customers back to cable television? Indications are it won't. Streaming giants are pumping billions into new content. They've created cult favorites. You associate certain shows with streaming, like Stranger Things with Netflix or Game of Thrones with HBO. These companies have capitalized on this trend. It also helps that internet keeps getting cheaper. That's the big difference between cable and streaming. Cable does not need internet, streaming services do. There's no point trying to wait for streaming to fall apart. Instead, cable TV needs to reinvent itself. Why would I wait 1 week for a new episode when all of them are released together on Netflix? So the strategy needs to change for the advertisers too. If your viewers are tuning out of cable TV, where does it leave TV ratings and the ads that follow them? Think about it. For our last story tonight, let's go back to the year 1954. That's when the first human organ was transplanted successfully. It took surgeons 9 attempts. But at last, they were successful. They transplanted a kidney. About 7 decades have passed since, and now doctors have achieved another feat of transplanting, again with a kidney, but this time they have put one from an animal inside a human. Now, usually human bodies reject an animal organ within minutes, but a pig kidney was transplanted into a brain-dead man in the US, and it continued to function for 32 days. This is a great advance. We'll tell you how. Also, why humans need animal organs in the first place. Here's a report.
100,000. That's the number of people on the transplant waiting list today the world over. 100,000 people. Every 9 minutes, another name is added to the list. And every day, 17 people die waiting for an organ. People die after waiting years for a transplant. Some become too sick to even receive one. Others never make the waiting list. The situation is dire. For years, science has been trying to find a solution, and since long, it's known what it could be. Xenotransplantation, the use of organs from a different species, usually animals. But science hadn't been too successful thus far. The organs failed soon after transplantation. In 2022, US surgeons transplanted a gene-edited pig heart into a dying man. He survived only 2 months before the organ failed. In 1964, another US surgeon had attempted transferring a chimpanzee's heart into the chest of a rapidly deteriorating 68-year-old man. He rejected the chimp heart. He died after 90 minutes. A series of disappointments. But doctors didn't give up on trying. Here's why. A pig kidney has been transplanted into a brain-dead man in the US. The kidney was genetically altered and it continued to function for 32 days. It didn't get rejected instantly. It's taking over the functions of a human kidney, like producing urine and filtering toxins. This is a huge feat for transplantation. It follows another case from this week, where another US brain-dead man received 2 pig kidneys. They continued to function for 7 days. These transplant surgeries have given hope to the world. In 2021, 144,000 people got their organs transplanted. 38% of them were kidney transplants. None of them came from animals, because animal kidneys are usually rejected in minutes after they're transplanted. And rejection is not just physical when it comes to animal organ transplants. The field is not free of controversy either.
It really is a very complex issue that needs to be looked at on many levels. But as an Animal Protection Association, we of course find this ethically very questionable and not justifiable, because animals should not serve as spare part storage for humans.
The ethical concerns continue to be up for debate. But one thing is clear. Animal organs have the potential to do wonders for people across the world. It could be life-saving therapy. There are miles to go, and the science has only just begun.
And now it's time for Vantage Shots, images that tell the story. We're starting with Argentina. A bus unexpectedly caught fire on a highway in Buenos Aires. It led to panic among the passengers. The fire started spreading on the highway due to fuel spillage. In Tahiti, people picked up their surfboards for the Tahiti Pro Surf competition. And in a tribute to Indian superstar Rajinikanth, the Japanese ambassador to India danced to his new viral hit. You have to watch the video. And finally, taking you back in history, on this day in 1947, the Radcliffe Line was revealed. India and Pakistan had become newly independent from the British rule. The Radcliffe Line divided them into two separate territories. This is a man who never visited India, by the way. He divided it. And this was followed by widespread communal violence. We're calling it a wrap. Thanks for watching. We'll see you tomorrow.
Thank you.